the time has come for commodities, but the time never went, did it, really? So give us an idea of why, especially now. And number two, what at the moment intrigues you most about the commodities complex? Where's the value and where do things go in various assets within it?
Sure. So thanks very much for that. Commodities have actually been outperforming equities, rates, and bonds since about the third quarter of 2020. Took a little breather in the fourth quarter of 2022. But as we look forward to 2023, we think that the number of wildcards that are in the marketplace this year is just really, really extensive. It's extensive due to changes in international system, changes in power relations, changes in domestic economies, particularly those that have some impact on commodity prices. So we think that given wildcard risks, commodities usually tend to provide institutional investors a little bit of a lift when you have this wildcard risk seen. That doesn't mean that all commodities are going to go up, but our favorite ones for at least the end of the year and into next year are really the industrial metals. We think they've been a little bit overbought at the beginning of the year with exuberant expectations about where Chinese growth was going to be early on. But it looks like Chinese growth will be steady through the year. And by the end of the year, we're going to be running into supply bottlenecks. Those supply bottlenecks in metals such as copper are going to be accentuated by the rise in what we call vox populi, dissent in commodity-producing countries, dissent around the world. But we see it particularly in Latin America, including in Chile and Peru and in Brazil. So commodities associated with those countries, but particularly on the metals complex, should be looking very good.
Yeah, the voice of the majority, as vox populi means. So that's, of course, something that you have to look at with every kind of asset class, don't you? So why do you single out those nations that you mentioned, and what in particular intrigues you?
Well, certainly those nations have had changes in government. They're veering to the left. They're involved in putting in place policies that look like they'll be restrictive of mining. And particularly some of the countries have seen people not wanting to leave the streets. And that's particularly true, as I said, of Peru and to some extent Chile. But we're also seeing the same kinds of things in other countries as well. Certainly, the protest movements in Iran are something to watch. These are secular protests against a theocracy. Right. A theocracy was seeing a government change almost inevitably with no clear succession plans ahead. And we are reminded of what happened in 1978 and 79 in many respects. So the dangers of domestic upheaval in Iran, Iraq are higher than you'd otherwise expect.
Ed, I want to talk about oil. What's fair value for crude given China's reopening, given that inflation in the U.S. remains very hot? Of course, we saw that jobs data coming in on the surprising side. And of course, there are expectations that perhaps the Ukraine crisis will worsen from here, given how the U.S. has been equipping Ukraine with those weapons.
So I think the oil market is a little bit different than where the metals markets are. The oil market, like the gas market, have seen downward price movements, partly weather related, partly related to just plain supply and demand balances. There is definitely disruption risk ahead in the oil markets. But meanwhile, the long anticipated shock that was supposed to come with the European embargo on Russian petroleum products as of last Sunday, that shock didn't happen. Quite to the contrary. We saw that the market, having gone through the dislocations that occurred when Europe decided to get off of Russian oil over the course of 2022, led the market to kind of anticipate what was happening. And the market, in this case, was led a little bit by Russia, that was maximizing distillate exports to Europe before the embargo took place. That allowed the European inventories to go from below the 5-year average at the end of October to over the middle of the 5-year average at the end of January. And on top of that, Middle East countries and Asian countries started exporting oil to Europe. This came from both India and from China. The Chinese exports are in line with China having boosted, given licenses to a very large amount of product exports, rising to about 1,600,000 barrels a day. And whether it's political or not, we think it is quite political. China is sending a significant amount of diesel into Europe in order to show that in a world where there are trade issues with the United States, they want to make sure that trade relations with Europe